Hi, welcome back to capitalforextraining.com. In this lesson, we're going to be discussing how to trade the Stochastics divergence strategy. And the reason why a lot of traders like this strategy is because it's almost one of the easiest ones to follow in terms of the rules. And the reason for that is because this strategy has only got 3 rules to follow. One rule relates to one indicator. The other rule relates to another indicator, and the third rule, the last rule, relates to swing structure. So don't worry about what any of that means for now, because we're going to explain it in literally 1 minute. But what I firstly need you to do is to load up 2 indicators on your charts. The first indicator is the Bollinger Band indicator. If you're trading 1 hour or below, the period setting for that indicator needs to be 10. And the deviation setting for that indicator needs to be 1.9. If you're trading 4-hourly charts or above, then that period setting needs to be at 20, and the deviations setting needs to be at 2. But because I'm trading on M15, as you can see here, I'm using 1.9 for the period, and 10 for the period and 1.9 for deviations. The second indicator that I need you to load up are stochastics, and the settings you need to put into there are 5, 3, 3. So the percentage K period needs to be 5, and that stands for any time frame that you're trading. That rule doesn't change. So in terms of the 3 rules, what we're looking for are the 2. First of all, is for each indicator to tell us that there is a chance of the market basically either bouncing in an upwards direction from a strong support line or a downwards direction from a strong resistance line. Because we're trading upwards in this particular example, we're only looking at support. So what we're looking for the market to have first of all is a very strong support line. Now a strong support line is defined by the number of hits it has on it, i.e. the number of fails that the market had of trying to penetrate through it. So you can see here we've got 1, 2, 3, 4 hits. So the market has tried 4 times and failed 4 times to penetrate that line. Now, in terms of indicators, you can see that on the 4th hit, the prices have also hit the lower Bollinger Band. So the market has not only failed to penetrate that support line, but it's also hitting and bouncing from the bottom Bollinger Band. Okay. Now, when you draw a horizontal line that mirrors stochastics in that same area, you can see that it's either penetrated or touched the 20% line. Now all that means in stochastics terms alone is that the market is currently oversold. Okay, so what do we got here? We've got another failing and a bounce from a strong support line that's defined by 1, 2, 3, 4 hits. Okay, it doesn't need to be 4, it can be 3 or above. Then we also got a hit and a bounce of the bottom Bollinger Band, and we also got an oversold situation in the stochastics indicator. Now we don't trade that yet. All we have now is an idea that there could be a sign for a potential reverse here. So in order for you to trade that reverse, you're looking for divergence, and this is how you find it. I'm just going to move this out of the way. Ignore that for this moment. What we've got here at the stochastics line is at the next low that stochastics makes, you got a break of the first low. So if we join those lows together, because the second low is lower, okay, you can see that basically, like I said, you've got the break of the first low made by stochastics, and the low is actually a lower low. Okay, however, that is not mirrored in the price chart. Okay, what you actually got is a higher low. So this, I'm just going to move this down a little bit for you so it's on the right place. Oops, there we go. So you've got the stochastics line pointing downwards. You've got the price line that joins the 2 lows going upwards. That's the divergence that you're looking for. Okay, so at the same time when stochastics started creating its new low, i.e. it broke the previous low that it made, at the same time the prices were not making a new low. That's the divergence that you're looking for. And the way that you know how, or the reason that you know why this is a good area to start trading in an upwards direction, is because you got the same thing happening here that you had here, which is the hit of that lower Bollinger Band. So when you see a new low being formed in stochastics and a break of that 20% line at the same time to that, if you see a new high and a hit of the lower Bollinger Band, if you see a new higher low and a hit of the lower Bollinger Band, it's time for you to place a trade in an upwards direction. Now, if I just move that out of the way, the actual target you're looking for is just there. The target is literally the previous high, and the stop loss is simply just a couple of pips below that lower Bollinger Band, or the wick, or the lowest part of the candle that hit that lower Bollinger Band. And you will see that the risk reward for that are kind of a bit out of this world, really. And so in this particular area we had 34 pips, because it's actually 3.4 pips because we're using a 5 decimal broker here, but the actual stop loss is only about 0.4 pips, or 4 pips as we call it, in this particular broker. So you can probably get 5-6 of these incorrect and 1 correct, and you'll still be making money from this trade, because the risk reward ratio is so much more in favor of the reward than it isn't risk. But as I said, so the 3 rules that the reason why traders kind of find this trade a bit kind of easier to trade, because you only have to follow those 3 rules. 1 is the hit of that support line. 1 is the hit of the bottom Bollinger Band. 2 is the break of the first low in stochastics, and 3 is the creation of swing structure, which is basically a new higher low that's created at the exact same time that it hits the Bollinger Band, but more importantly at the exact same time when the first low of stochastics is broken. And that's where divergence is created, and that's where you have a signal to trade in an upwards direction. So any questions or comments, let us know below. If you're viewing this on our website, let us know in our blog, or if you're watching this on YouTube, simply place a few comments below, and we shall see you for the next lesson.